Hi, this is Stephen here from Share Navigator with an update on the S&P 500. So you're looking at a 1 year daily chart here, and as you can see, recently the index came off its all-time highs back down to the 50-day exponential moving average, which is this kind of purple line here, and has tested it twice and has now started to rally back up towards the previous all-time high. So this is going to be your first resistance point. If this resistance holds and the index fails to break through, you can probably take it. It's going to rebound back down towards that 50-day moving average, or these two little candles here, which were slightly below the 50-day moving average. So at the moment, this moment in time, that 50-day exponential moving average is acting as a strong support. However, if we get broken to the downside and we start trading below there, that level, you're looking at 4,000 as first support, but then it could be a big drop down to that 200-day moving average, which is coming in at around 3750 in and around that area. So they're the kind of key support areas and the key resistance areas at the moment. So we may be just in a sideways channel here. It's going to go and test that previous all-time high again, which is quite normal. It's unusual for an index to put in a high and then not go and have a test of it again and seeking to make a new high. If we make a new high, well, then all bets are off as to where it's going to go. If we test this high and pull back, it looks like we're going to come back to that 50-day exponential moving average. If we break below there, the 200-day exponential moving average is next in line. A couple of things to be wary of. The conversation at the moment is changing. It's towards an inflation conversation. So we've had data out of the US, which was a big shock to the market last week or the week before. And inflation is real. We know that it's happening across the board. No matter where you live, the price of building materials has gone up. You can see it in the price of commodities. They're all surging. So inflation is real. But so central banks are sticking to their theme that it's transitory at this moment in time. And they were always going to say that. They're not going to spook markets. So don't forget this rally that you're seeing here in stocks, and you've seen pretty much for the last 10 years, is really based upon low interest rates, central banks providing quantitative easing, in other words, artificially keeping interest rates low. Um, and of course, if inflation becomes an issue, then central banks have to tackle that and interest rates would have to rise. So you can imagine what's going to happen stocks if that conversation starts to gain a bit of traction. So at the moment, it's like a warning sign. Inflation is around, it's here. Um, Central banks are saying it's transitory, but they will monitor it. So this is going to happen in three steps. First, step one will be central banks will change their language and say they're going to consider tapering their asset purchases. So that's basically a change to quantitative easing. The second stage will be they actually go and do that. So they stop the purchase of assets. That's going to lead to bond yields rising significantly. And then the next stage then is they actually go and raise interest rates. So in my own view, what you've got to be very careful of is listen out for central banks, listen to what they're going to say. When they say we're going to ease off on the QE, that's the start of the process of interest rates rising. So if this market has gone up and valuations have been stretched based on low interest rates, you would have to assume that the opposite is going to be true. If interest rates start rising, you would imagine that, some of those stocks that are overvalued basically are going to come back in. So when this happens is anybody's guess. But the key data point for you now to listen to is what central banks say. The minute you hear them say we're tapering, we're going to ease off in the asset purchases, that's your time really to start considering either setting up a bearish trade on the market or getting out of your long positions. Okay, this is Stephen from Share Navigator with an update on the S&P 500. Thanks and bye for